Deven Sangoi, the Chief Investment Officer of Equities at Aditya Birla Sun Life Insurance. Thanks, Deven, for joining us here. This is Nayanthara from New Delhi. We've been talking about ITC a lot. It's overtaken HUL.
Good afternoon.
Look at the kind of activity you're seeing on the stock. Good afternoon. So if I were to look at your Super 20 fund, I do see that there is a 7% exposure to ITC. Do you think a time has maybe come for fund managers like yourselves to maybe increase the exposure to ITC? Are you also increasing exposure to the rest of the FMCG pack and consumption stocks?
So I think what we have been doing is, tilting our portfolio more towards the domestic consumption and domestic demand-driven portfolio. Consumer businesses are part of it, and we are very much overweight on all these businesses, ma'am.
So, so domestic consumption is clearly, on every fund manager's is the fund top choice at the moment. Isn't there therefore a fear that all of this is going to get overvalued?
So I think we've seen there are a lot of value still left. So there are some consumer stocks which are very expensive, and there are some consumer stocks for the growth. They might come from the tobacco side, they might come from the hair oil side. So we've been looking very bottom up, and wherever we found value, we've been adding it. And the consumption themes gets extended to consumer banks, to durables, to four-wheeler, two-wheeler. So I think we are trying to pick and choose where the valuations have become reasonable, and the growth looks quite robust, or for the growth valuations become quite reasonable. So I think that's a lot of bottom-up work which has gone in, and we are trying to pick for this fund top 20 stocks or large blue chip concentrated portfolio, which have delivered a sustainable, very good outperformance over benchmark on a long-term basis.
I was just going through the holdings of the Super 20 fund, and you have invested in big boys like Reliance, HDFC Bank, Infosys, and even an ITC. Just wanted to get in your perspective on the broader universe. How are you reading into the recent consolidation that we've seen in the broader markets in both mid caps as well as small caps? Both of them saw a massive meltdown. Would you think that now the valuations are slightly better and look more attractive for some companies?
Sure. So basically what has happened, if I look at the mid cap and small cap universe, is quite broader, and we have seen a much sharper correction. But on the other side, there have been stocks which have consistently done better even in this carnage. So I can give you a durable stocks. I can give you a lot of example of consumer stocks or consumer NBFCs, and they've consistently delivered. So I think wherever we've seen a good earning growth, a surprise in the earnings, the stocks have performed. So unless until the stocks which have been impacted are one which are heavily leveraged balance sheet, very sensitive to interest rates, and maybe sensitive to commodity and currency movements. So as long as you avoided that, I don't think so I would put a picture that all the mid cap or small cap is bad. As long as you choose the right business, right valuation, stocks have done pretty well, and market has been pretty rational with good business, good quality of business, and good quality of earning delivery.
In the thick of earnings season, yesterday we saw Yes Bank, today is ICICI, and Monday is Axis Bank. Just wanted to get in your perspective on the banking space, what is the kind of view that you are holding at this point of time? This is for both private as well as public sector lenders. Do you think that the worst is over?
So within the private sector, let me divide it into a corporate and consumer banks. I think consumer banks have been doing pretty well. On the corporate side, I think the worst is already over. We have seen an huge amount of NPA been provided for, and we feel that we are at bottom of the cycle. We are getting positive on private banks, and we have removed our underweight on the private side. On the PSU side, we still contain with the largest PSU bank, and we feel that there's a lot of value emerging out there. It's got a balance sheet, it's got ability to raise capital. So overall, on the corporate bank, I think the worst days are behind, and we'll see a very good future. As you see, large part of provision is behind. Provision coverage is pretty good, enough capital available, and the growth opportunities are opening up.
Okay, Deven, let's leave it at that. Thanks so much for joining us here and talking about the markets at large.